So welcome back to the course. Now in this module we're going to be covering cryptocurrency. So we've previously been over the origin of cryptocurrency and how crypto actually started. Then we went on to go through fiat currency, essentially the origin of fiat currency and the current state of fiat currency in our monetary system. And now we need to start diving into crypto itself, okay? What this course is all about. Now, we are going to be reiterating some points from previous modules, but again, the more times we go over these points, the more it's going to sink in and start to make sense. So briefly, the contents of this module. Again, we're going to be going over what is cryptocurrency. I'm going to break down exactly what the word means, why we need crypto, its main three properties of transactional, monetary, and revolutionary properties. Then we're going to be talking about its volatility. Now, I'm sure many of you already know that Bitcoin and cryptocurrencies are incredibly volatile. So we're going to be exploring exactly why this happens, especially as it's such an early industry. We're going to be going over speculative value and also how that feeds into the volatility cycle. Then we're going to go over, again, if Bitcoin is an asset or a currency. So then, what exactly is cryptocurrency? Now, it's fairly self-explanatory. If we break down the words, crypto refers to the cryptography used in the blockchain technology that represents the ledger of transactions, okay, the record of transactions. So crypto refers to how it is secured and how that ledger of transactions is actually maintained. Currency, fairly self-explanatory, refers to its ability to be utilized as a medium of exchange and store of monetary value. So again, why do we need crypto? Well, if we look at it in terms of it being decentralized, what does that mean? Well, we're removing the need for third parties to verify transactions. Okay, a third party, for example, might be something like PayPal or Stripe. They are trusted as a third party to verify the authenticity of transactions. Okay, now we have to trust that company to do their job. Okay, now that company is run by people and people make mistakes, and there's a lot that goes into a company the size of PayPal, for example, and Stripe, obviously. However, we still have to trust a company, a business, to do their job. And Bitcoin, as well as cryptocurrency in general, removes the need for us to trust those companies because we can trust the security of the blockchain technology behind Bitcoin. We're also removing the need for a third party, or the ability for a third party rather, to inflate the currency. Now, we're talking about the central banks here and their ability to just print cash as they want. Again, we need to kind of stop this from happening because it causes inflation and it causes our purchasing power to decrease, like we said in previous modules. And it's also creating a fair global standard of exchange. So anyone in the world with internet access can own cryptocurrency. They can begin to build up a bank account, if you like, in crypto, and they can start paying for things online with their mobile devices or their computers without having to go through the verification steps needed to open a bank account, for example. So that is creating a fair global standard of exchange. Now, in terms of the properties of crypto, there is three main properties. Now, in particular in Bitcoin, Bitcoin's immutable ledger allows for a transactional property. So all transactions and records cannot be tampered with or reversed. And this is to do with the cryptography used to secure the blockchain network, to secure the ledger full of transactions. Okay, this property is essential for a digital currency as it provides validation for transactions and values, okay? So we can trust that this ledger is doing its job and doing what it is designed to do. So monetary properties of crypto, in particular Bitcoin. Bitcoin has the characteristics of money. Its fungibility, which means, for example, money is money. If I give you a coin, that coin might represent £1 or $1. Okay, or a dollar bill, sorry. Now, whether I use a different dollar or pound coin to pay someone else, it doesn't necessarily matter because the currency is the same. It doesn't matter whether I have a different coin or a different bill because the currency's value stays the same. This is its fungibility. Bitcoin is the same. Whether you buy one Bitcoin and sell it and then buy another Bitcoin, it has the same value. Its scarcity. Okay, so Bitcoin is very scarce. There's only 21 million coins ever to be made. Its divisibility. So Bitcoin can be divisible into multiple decimals. And its recognizability. So everyone knows the pound, everyone knows the dollar, and everyone's going to know Bitcoin. Okay, Bitcoin at the moment has the top of mind awareness for cryptocurrency. Okay, it's based on the properties of mathematics rather than relying on physical properties or trust in central banks. Okay, that's the difference between Bitcoin's monetary properties and the current monetary properties of money. And finally, we have its revolutionary property. So Bitcoin's decentralized blockchain technology allows for the trust machine to remove human error. Now, this is the first monetary revolution we've ever seen, and it's the last monetary evolution we will ever see. Okay. And also at the bottom there we have, we're becoming a type 1 civilization. And the medium of exchange has to be revolutionized on a global level to become this type 1 civilization. Okay, now if you want to do some research on that, you can by all means do so. However, this course is not going into what necessarily a type 1 civilization means. But it's very, very interesting to go into if you do want to. Okay, so this is the revolution that is needed to become it. So why are crypto prices so volatile? Well, speculation fuels volatility. So coins and tokens currently are cashed out at all-time high prices, ATH, to allow for individuals to spend their profits in fiat currency. Okay, if someone wants to buy a new car or house, with the exception of BMW, for example, because they do accept Bitcoin and Tesla, people want to cash out their profits into their country's currency. Okay, that's why prices are so volatile, and we'll get into the cycle in a moment to kind of visualize what actually happens and why the prices do fluctuate so much. So once Bitcoin has a higher market cap and becomes a globally accepted currency, cashing out into fiat currencies will be a thing of the past. Okay, and this is going to reduce the volatility. Now, at the moment, Bitcoin almost gets its value from fiat currencies, because when we talk about Bitcoin, we say its price in fiat currency. We say, oh, Bitcoin is $10,000 or £10,000. Oh, Bitcoin's gone up to $20,000 or £20,000. Instead of saying, once you have the currency, you might say, I own 1 Bitcoin. And that will have the same weighted value as I own $1 million or £1 million. Okay, eventually people will start to feel the value of the amount of Bitcoin instead of the amount of fiat currency Bitcoin is worth. And also in terms of Bitcoin as an asset, just like gold, we see gold's value in terms of currency, fiat currency. Okay, we don't necessarily talk about the value of gold in ounces. Okay, because it doesn't have that monetary value to us. It's not a currency. Okay. Now, in terms of volatility, again, the public is very short term when presented with quick, high returns. People want to cash out their profits, and because it's so volatile, people make a lot of money very, very quickly. So, what is speculative value? Well, speculation is essentially an optimist in the unknown. It's someone who wants to think positively or bullish about a scenario which isn't quite as known. For example, there's not much history of cryptocurrency. Yes, there is the past 12 years. However, that's not a lot of data in terms of the hundreds of years that the stock market has been going for. Okay, so Bitcoin will always be of speculative nature due to it being a non-physical asset that produces no yield or profit. Now, what do I mean by yield or profit? Because Bitcoin does go up in value. Okay, it is an asset. It's a non-physical asset. It does produce a profit, but only because the price of the asset increases, not because of its yield. Okay, so for example, a farm with its crops generates a yield per year, per annum, from its crops. Now, a business does the same with its revenue, its income. Okay, Bitcoin doesn't do that. Bitcoin is just a non-physical asset with protocols or rules which make it valuable to me and you. So then the volatility cycle. Okay, we can see speculation right at the top. So people are bullish about Bitcoin. They're speculating that Bitcoin's price will increase. Okay, now when a large amount of people do this, the price tends to increase. Okay, and then people get more bullish and people get fear of missing out on gains and profits. So everyone piles in. And then people start to take their profits. They start to close their positions and sell the asset. Okay, they start to take profits off the table. And this reduces the market cap of the asset of Bitcoin, and so the price decreases. When this happens, people become almost, in a weird kind of way, they become more bullish because the price has now decreased. If people can see the long-term value of Bitcoin, a decrease in price is almost a buy signal. It's a good opportunity to buy at a discounted price. And so people start to speculate again. And the whole cycle continues infinitely. And finally, we're going to go over asset or currency. So Bitcoin is expected to appreciate in value. Of course, we know this. Okay, Bitcoin is and does have the properties of an asset. However, it's cashed out at the moment into fiat currencies, just like we've just talked about. Okay, so Bitcoin at the moment, its value is linked to our fiat currencies, and it gets its value from our fiat currency. So people are cashing it out, and this means we would call it an asset. However, once the price does stabilize and it becomes a global standard currency, okay, there would be no reason to cash it out. And this would essentially mean that Bitcoin would become a currency, okay, because we would no longer want to cash it out into fiat. We would want to just accumulate Bitcoin just like we would want to accumulate our money, our savings, for example. So that is it. That is the cryptocurrency module complete. And in the next module, we're going to be looking at blockchain and how it works and the technology supporting Bitcoin. So really, really interesting stuff. And I will see you in that module shortly.